past weeks have seen China influence the global bond markets significantly. Joining me here in the Dugascopy studios in Geneva to discuss is Mirko Visco from Generation Alpha.
Good afternoon, Jessica.
Welcome back.
Thank you so much.
So, looking at the market reaction, we've seen European stocks fall to their lowest since 2008. So, should investors brace themselves for further market volatility?
I think the volatility will remain in the market, but I don't think it will be as big as it used to be last week. Usually, the good part is that volatility tends to remain for a period of a month, 2 months as in general, but gradually comes down. And when the market hits the bottom, it's when the volatility hits its peak level, which usually is the sign of the market capitulation. And I think what we've seen last week is exactly that level of capitulation. After situations of capitulation, policymakers tend to act, and they only usually wait that moment to act. That's what happened with China. They intervened in the market, they cut interest rate by 0.5%. They started selling some of their US dollar treasury bonds to bring the liquidity back to the economy, to bring the liquidity back to the stock market. So some volatility will probably remain, but I think all in all, it will probably not lead to lower levels from the lows that we've seen in China last week.
And despite all this market weakness, Brazil did not deteriorate as low as expected. So what does this show?
That's the beauty of showing charts. If we take the Brazilian market in local currency terms, we see it's being down 3% versus -12% for the MSCI emerging market. But then if we show it in US dollars terms, the Brazilian market is down 27%. That shows that most of the impact, in fact, is a currency effect. And the currency is the best reflection of the situation of the economy. Brazil is going through a situation of crisis and the lack of confidence in the politicians. We have the polls showing Dilma Rousseff not being in a good position. We have the situation of the scandals of Petrobras. We have the depressing commodity prices, and Brazil is a country of exports. So automatically, even though some of the stocks may have not suffered much, it's the FX market that has been suffering in Brazil.
So following market movements in recent weeks, are countries such as Brazil and China at risk of market correction?
Again, as I mentioned before, the situation of Brazil is a bit different. I think it's a local crisis, and even though some of the bonds in Brazil deteriorated as well, there has not been contagion towards the rest of the Latin American countries. The situation of China is quite different because China is the third economy after the US and Europe. China can impact, I think China can have a threat to the short-term volatility in the stock market. I don't think that until now the Chinese crisis or the Chinese correction is having an impact on the US economy, at least on the health of the US economy. All in all, investors are looking at different clouds in the sky. And the Chinese correction of last week was eventually one of the latest one. You have the Greek story that is still not ending, and we hope the Greek government will be able to pay back some of its debt without having to go under restructuration again. We have the situation of lack of trust in the European politicians. Merkel is having troubles with her own party. Hollande is showing to have the lowest polls in the French newspapers. And in Spain, Podemos, which is a new party, is leading some of the largest cities such as Barcelona. So the European has not been able to show some growth. There is an issue on the political front. There is the issue of the Greek border, the Russian border with Ukraine. There are quite a lot of things that I think need to be solved before investors go back into the market. And it's not only Brazil and just not only China.
Well, Mirko, thank you so much for taking the time to speak with us today.
It's my pleasure, Jessica.
And thank you for watching. For all the latest Dugascopy updates, do keep clicking back. Goodbye for now.